And welcome to today's episode of the Craving Crypto podcast. Today we're going to be talking about Facebook ad bans and a news article that came out recently discussing what's happened there. So I'm going to go over my thoughts on that. By the way, we're doing these uploads 3 days a week now, every Tuesday, Thursday, and Friday. So expect new episodes and new content coming more than before. So yeah, if you have any suggestions on the way that I do this or ideas for this, I'm open to that. You can drop them in the comment box below as well. And of course, we do the market overview each week, so it's not like you're missing out on price updates. You just don't get the full technical aspect that I used to do in my live streams. But this is really better anyways because the majority of that content is VIP. Like I said, we talked about this a little bit last week, but I just wanted to run over, clarify some things, give you guys my full opinion on the whole subject, especially since we got this article coming out. And I know I don't trade news, but I do want to touch on some of these articles and give my opinions on them, and just so you guys can get a little bit more aware of the fundamental aspects of it. Although I don't advise that you base your trading decisions on the fundamental aspects of cryptocurrency. The market cycles work better for analysis. Anyways, let's get right into this. Episode 3, Facebook unbanning ads. So hit that like and hit that subscribe button. Let's get right into the market overview and we'll go over our daily topic next. Headed over to coinmarketcap.com. We go over the top 5 cryptos first. Number 1 being Bitcoin at 105 billion in market cap, current price standing at $6,160. 24-hour volume is 3.2 billion and the 24-hour price change is minus 1.6%. So we haven't had a lot of volatility since my last video, and I was talking about how we're in a low volatility range right now, meaning that we're not going to see a large fluctuation up or down in price while we're in this zone until we get a clear break upwards or downwards for further upside or downside. Now, Ethereum is at 44 billion in market cap, price is at $439, 24-hour volume is 1.3 billion, and the price is a little bit more bloody than Bitcoin at minus 4.6%. Ripple is at 18 billion, price is 46 cents, 174 million in volume and minus 3%. Bitcoin Cash at 12 billion in market cap, price is at $719, 24-hour volume is a little bit more than Ripple, about twice as much as Ripple at 351 million, and the price change is minus 5.2%. EOS is 6.9 billion, price is $7.75, and the volume is twice as much as Bitcoin Cash at 600 million, and minus 24-hour change is 5.8%. So the market's pretty normal right now. We're dropping back onto the support levels that I was pointing out earlier, where we're watching the support that we've landed on back in April at around $249 billion. If we go in for a new low in the market cap here, it wouldn't surprise me if we test the $200 billion mark, which is about another potential 20% drop. Now again, this is why you need to accumulate panic, because you don't know for sure if it's going to stick at its current low or go in for one more low. You're working with probability, and the easiest way to do that is to buy the dip little bits at a time, so that if you do go in for a deeper price, then you just get more entries rather than panicking that we're dropping lower. So as far as the total market cap goes and the crypto market goes, I'm still bullish and expecting a reversal soon. But again, that doesn't mean that we can't make another low due to some short-term weakness. And it wouldn't surprise me if we did, just due to the fact that we dropped below our previous low on the BitMEX chart, which is something that somebody commented on last week's video. So I see you, Alex. He said no talks about dip below 6,000. So, you know, in these market overviews, I don't want to go into too much technical analysis. I just want to give you my perspective on the price and where it's going on the short term. But I do want to just run over this real quick since it was a comment. We went to a new low about $2 or $3 below the lowest low. Now, that low was made in February, and this was a wick. So we actually didn't close above. I mean, we did close above the lowest low. This could turn around at current price because it can be a false breakdown when it doesn't close below that low, but it still wouldn't surprise me if we go in for a little bit of a deeper correction here and see a little bit more panic before going up. Now, that doesn't mean that we still won't see the reversal. And as far as my long-term predictions on Bitcoin, I'm still sticking to the 100K prediction. Just when we reach those prices is another story. We just have to let the market correct as it will and kind of do its thing until it starts its clear uptrend. But I will say that if you compare this to a market cycle chart, you'll see that it's extremely identical to the Wall Street cheat sheet, and a bottom is expected relatively soon. It's just anybody's game as to what exact price that bottom is. So moving on, we will look at the total cryptocurrencies in the market cap. We have 1,590. We have 1,127 different marketplaces, which is pretty amazing. Or no, actually 11,271 different markets in the crypto space. And again, the price is falling back onto that support. So we're just watching it and then analyzing whether we're going to go in for a little bit deeper or turn around here pretty soon. So that's my thoughts on the market overview. Now let's get into the weekly topic. Now I will touch on this just a little bit because last week I said that the ban on the Facebook ads hadn't even taken effect. Now I was wrong on that. I fully admit the ban had taken effect completely, but the ban had some different things that they were really pointing out. And the main thing is ICOs. They didn't want to be promoting terrible ICOs, especially towards the top of the market when there was just all these terrible coins without real world use cases that were just getting pumped on the top of the market. And so Facebook just banned them for the short term because of that. They actually have a blockchain analysis team currently, so it's not like Facebook is against cryptocurrencies or anything like that. They just saw some potential risk for allowing people to just promote terrible projects when everything was so hyped at the top. Now they have come back with an article. The article's headline is Facebook is reversing its ban on cryptocurrency ads. And it just basically states that Facebook is reversing its ban and will now allow some pre-approved advertisers to promote cryptocurrency businesses and services such as exchanges. But ICOs are still technically banned on Facebook. Now, I think that this is a relatively good thing. As I mentioned earlier, I think they were just trying to avoid terrible projects getting promoted. They just didn't want to be liable for everybody buying all of these terrible ICOs when the top of the market was so hyped that basically anything would get people to dump their money into it on an initial coin offering. So I do think that this is a good thing as far as that goes. And them revoking this ban currently and allowing businesses to promote exchanges and even educational content is a really good thing because that will allow a lot of people to come back into the space. That from an economic perspective, it just allows for a pretty big chunk of the market to get back into promotion on Facebook, which is a large platform with a lot of users. So this is a pretty good thing for crypto in general for them to be revoking this. And again, as far as the ICO goes, I do think that that was a good thing just because personally, I don't really do ICOs very often. I have nothing against them, but I do understand that many of those ICOs were just terrible coins without any real world use case. And they were just taking advantage of the hype that was happening towards the end of the year in 2017 to kind of, you know, dump onto the market and pump their coin to make a lot of money in a scammy sort of way. So that's actually a good thing for crypto in general that they took that away for now and are kind of reevaluating things. And it looks like they're slowly coming back in, allowing some things, you know, that make sense to be allowed and then rethinking the whole ICO thing. I wouldn't be surprised if they bring it back at some point, but just have a lot steeper regulation on it. And again, you know, Facebook has their own little team looking at the blockchain technology. So it's not like they're against crypto or anything. They just saw some risks because of their advertisements and how many users were looking and clicking on all of those ads. So anyways, I think that overall, this is a pretty good thing. And again, from an economic perspective, it brings a lot of people back into the market for self-promotion and advertisements. Now, I want to talk a little bit about a crypto flaw debunked. This one is China miner centralization, and I have a little video that you can go watch as well. These documents are in the description of each video. You can click on it and follow along with the podcast. But But if you watch this video later, it's basically Andreas Antonopoulos talking a little bit about miner centralization in China, what's happening with ASICs, the rate in which ASICs are being developed, some of the economic issues of how you buy an ant miner and then 3 months later its shelf life is completely useless and you need the best technology. So it's just kind of this race, and basically what happened in China is people realized that you could make a lot of money due to the electricity costs and the kind of open market over there. So they just started building miners right and left. And it just created this influx of development. Like miner companies just kept dropping new miners. And it was every single, month that you had to buy the new miner if you wanted to keep up and stay profitable in your business. So it's just kind of this race of parabolic movement due to a small economic incentive and a very specific growth curve. Basically, crypto was growing extremely quickly at the time, and then all of this development was getting made in one area where it was really profitable. So miner centralization in China was kind of a hype thing, a part of the cycle along the way up. And I really think that this will die out as crypto continues to get developed and continues to grow and become something that isn't just done in America or China or some of these major companies that have a lot of computers and can promote these things. Third world countries are some of the biggest buyers of Bitcoin. And if you go to coin.dance, I want to show this a little bit because you can look at the volume rankings for all the different countries on here. It's really interesting to show what countries just do not care about the Bitcoin price. If you click right here, you can see the global volume. And at the top of the market, we had a lot of volume and it's dropped off since then. But that's only specific to a few of the major countries that really do this from a speculation perspective, because not everybody in the crypto space is in this because of speculation. A lot of people are in this because it's an actual real world demand and use case. Like Argentina, as you can see, their volume didn't really drop in the correction. A little bit, but they have to buy this because they need it. They don't buy this because they're speculating on the price. And same thing goes for Canada. Has actually had a pretty nice spike. Now, I don't know if they're buying it because they need it, but there's definitely a little hype there. Chile is one of the places that they're definitely buying it because they need it, because there's no correlation in the price dropping to the volume dropping. And I could go over a lot of different countries on this list here, but you get the picture that not everybody is doing this from a speculation perspective. A lot of countries need this. And so the centralization in one spot will die out as more countries adopt Bitcoin. And you can see that that's happening according to the volume here. So although miner centralization can be a short-term issue, it's not necessarily causing any specific problems that we see yet. It's more something that could become an issue if for some reason China continues to have this weird economic niche of them developing the miner technology and it being so profitable over there that it just keeps growing. But I think personally that as this develops and as the technology gets more adopted around the world, the centralization will only continue to decrease. It's just kind of part of the short-term hype cycle that we're seeing with cryptocurrency in general. So that, again, it's a short-term issue and can be something to be concerned about, but we're not actually experiencing problems because of it currently. It's not affecting us much today. And long term, I think that it will be overall eliminated as cryptocurrency grows. So, it's definitely something to be aware of, but not something to sell your coins over or stress about or worry about. It's just kind of how economics work and how China had a really strong economic incentive for a while to build miners. That's why it grew so quickly there, and that's why there's so many in China. Now, again, I highly recommend watching this video of Andreas Antonopoulos talking about this, because he does a really good job talking about the technical aspects of it, where I am just kind of going over the broad scope of what's happening. So, and again, I don't really want to talk about the price too much in these, but as a technical analyst, I just feel like it's my duty to make sure that nobody's panic selling and making smart investing decisions. So if you are worried about selling your coins right now, it's probably because of bad risk management. So my tip for you guys is to go ahead and don't care about what the price is currently. Just worry about affecting your portfolio long-term and making smart trading decisions. And go ahead and put 30% into the dollar, USDT. I don't remember if you guys remember back when there was all that FUD about the dollar, the US dollar tether. and how it wasn't really backed, and how I was like, I know people, like, trust me, this is legitimate. You don't have to worry about putting your money here. And it was really interesting that that was all happening towards the top of the market right when I was scaling out of my positions. It's crazy to see that the FUD comes out right there. It's a little suspicious, honestly, and I knew it was suspicious, especially since, like I said, I'm one person away from literally talking to the guy that does all of this stuff at Dollar Tether. So I highly recommend reducing risk in your portfolio, keeping 30% at all times so that you're not stressed if you're going for a new low. You can take 5 to 10% of your dollar, average back in a little bit more, and reduce your risk. It's really about managing the movement. It's not about predicting every little swing. It's about predicting the big cycles, averaging in, and reducing your risk so that you stay profitable and reduce the stress overall of holding these positions and holding these trades, especially if you're new to this and you've only tasted the bear market in crypto and you've only tasted the sell-off. It can be really discouraging. So I just, highly advise that you don't get stuck on that discouraged feeling. Just step back, allow yourself to rethink your trades, rethink your plan, make sure you're making the right decisions, invest in some education if you need to, and keep your portfolio balanced, because you can make money in this. It's a little bit harder in the corrections, and like I said, a lot of people started getting into crypto towards the top because that's where all the hype was. So you may have had a bad taste in your mouth, and if you're one of those people, it's okay. You're experiencing the first serious sell-off. There's a lot of profit to come. Don't get discouraged over yourself. As far as price predictions and exact prices go, again, that's all stuff that I only do in the Discord and in my forums on the website, so I can't really get into where you should be, exact prices you should be buying or selling. I just want to do these overviews so that you're making smart decisions. That's pretty much everything that I wanted to talk about today. If you guys are interested in signing up for Coinigy, I went over it last week. You can use my referral link here. BitMEX is a place you can leverage Bitcoin. If you're new to trading, I don't recommend doing leverage, but if you've been around in the space for a little while and you know how to use your stop losses, you can use my referral link to leverage Bitcoin here. As well, we have donations if you're interested in donating to the Craving Crypto podcast. And thank you so much for tuning in today's episode. I hope that you've been learning stuff. Hit that like, hit that comment, hit that subscribe. But yeah, Bitcoin's crazy, crypto's crazy, the whole market's crazy, and we're all on this ride together. So I'm excited to keep exploring all these things and talking about them. If you have any questions or suggestions for next video, go ahead and drop them below, and I will catch you guys in the next one. As always, stay profitable out there.